writing the definition of integrated report. An integrated report is a synthetic document containing information about company's business activity. Just think, in the financial statement, you don't discuss business in depth. You just write the numbers. So it's better you write separate discussion of business, its ecosystem, and how value is divided between its stakeholders, customers, investors, employees, suppliers. That means how companies benefiting all these parties, how these parties are affected by the companies steps. What is the future of company? Now, let me give you some latest example of Netflix, because this is the latest issue. Netflix share price went from 700 to 162. If you see their profits, the downfall of share price is more than 70%, more than 70 to 75% down. Listen, if you see that the change in their profit, the profit is not changed by declined by 75%. No, hardly it's 10% change in profit, but see the share price went down from 75% down. Why? Because in the integrated report, company discussed these all issues. That company has 222 million subscribers worldwide. Netflix has 222 million subscribers worldwide, out of which 75 million subscribers they have in USA, Canada. And in USA, Canada, there are many people, they still use the cable TV, 80 million subscribers. So, but because of password sharing, I'm just discussing this practical issue so that you understand things practically. But because of password sharing, you know, in Netflix, if you buy the subscription, you can give password to your brother, to your friends. So with one subscription, 5 or 4 people can watch Netflix. You better know this thing. So because of this password sharing, even these cable TV guys are also watching Netflix. So there is no more opportunity for growth. And in the integrated report, the Netflix management has written this thing. They have written that now we have the problem of growth. We are not getting new subscribers because we have competition with Amazon Prime. We have competition in India with that I forgot the name. Hotstar, I think Hotstar. Yes, Disney Hotstar. So because of this competition, and the future was dark, that's why the share price went. That's why the share price went. Yes, in that integrated report, they also write that because of Ukraine-Russia war, you know this thing, Netflix is an American company. And almost all American company, they have stopped giving service to Russian people. They have stopped giving services to Russian people. So Netflix also came out. McDonald's came out. Subway came out of Russia. They all are out from Russia. So that means now Netflix is not giving services to Russia. So that means decline in subscriber. So in the integrated report, these all information are available about the business future, about the competition, about different stakeholders, about the world politics, war and all. So this gives a more realistic picture. Are you getting? But now come to our topic, that is intangible asset. Intangible asset. The biggest issue with the intangible asset is, look at here. Normally, intangible asset include internally generated goodwill, internally generated brands, yes, customer list, which are normally not recognized in the financial statement, of individual companies. So the equity or net assets, the carrying value of equity or the carrying value of net asset is very small amount. But if you see the market capitalization, stock market valuation, it's too much. So there is a big gap. There is a big gap between the net assets, which is written in the company's SOFP. Look at me. There is a big gap between the net assets reported in the SOFP and the value of equity in the stock market. There is a big gap. And this gap is mainly because of intangible assets. This gap is mainly because of the intangible asset, because we don't recognize many intangible assets. Current IAS 38 does not allow us to recognize many intangible assets. So now integrated report plays a very important role, because on this integrated report, there is no IFRS. See, on income statement, on SOFP, on SOSHI, yes, you have to apply IFRS. You are bound to apply international accounting standard, but integrated reporting, you can discuss, in theory, you can discuss all these things. You can discuss many things which are relevant for investors. So that's the benefit of integrated reporting regarding intangible assets. Now look at here. Now, intangible assets play a very important role in integrated report. It helps user to understand the gap. I just told you gap between the carrying value of net assets in SOFP and fair value of equity in the stock market. There is a big gap. Normally, intangible assets are recorded at cost. At the time of takeover, only one time fair value valuation. Now, just think about the issues. For normal companies, organically grown companies, intangible assets are recorded at cost, 99% at cost. Now come to the second type of companies, the acquired ones. The acquired, the subsidiaries, parent and subsidiaries. Yes, when parent company acquires subsidiary company, parent company records each and everything of S company at fair value. So at the time of takeover, just one time you will bring the intangible assets at fair value. No more further revaluation, okay? No more further revaluation, just at the time of takeover. So there are two types of companies. First of all, organically grown companies, they record intangible assets at cost. Second type of companies, the acquired ones, the consolidated entities, they record intangible asset at fair value just once at the time of takeover. What about the further? What about the further measurement? What about 2 years, 3 years future forward? So now we need an integrated report for all these problems, because in future you don't record it. In future you don't record it at fair value. So now you need integrated help of integrated report. See, that's why still problem. So integrated report covers all future aspects, things not covered in numbers. NOS means numbers, are covered by IR means, for example, growth strategies and many things. One more thing, sometimes charity or CSR, corporate social responsibility, now this is very common nowadays. Companies do CSR activities, company does charity activities on large scale, and they do market that we are doing such a big thing. For example, the best example is that guy, owner of Microsoft, Bill Gates. Bill Gates does a lot of charity, and because of this charity, he's very super hit. He gets brand recognition, right? So, but in reality, charity is expense. In reality, charity is expense. We don't capitalize charity as an asset. So this charity is not recorded in the financial statement as an asset in your carrying values, but in reality, because of this charity, your brand is going up. So integrated report covers these type of events, that we did this level of marketing, or we did this level of charity and brand recognition. So that's why integrated report is important. I hope you got it right. But in the exam, you don't need to write in that much detail, as right now I'm